everyone. Welcome to Next Level Humanity Podcast, Masters Unplugged. I have a dear guest, Rosie Edwards here, and we will talk about a life in capital. And as far as you know me, one of my favorite topics, which is the inner discipline of investing. And we'll talk about judgment, patience. Hello, Rosie. Welcome.
Hello, great to be here.
Yeah, it's great to have you here.
Thank you.
And we chose the topic, the inner discipline of investing, because that's kind of like my favorite topic, which, we humans have been learning more and more, deeper and deeper in the past 20 to 30 years. Let's start from the beginning. For many people, investing is a skill. For you, it became a lifelong practice. And in my experience, I think investing I still think it's a skill, but I also think it can be learned and we get masterful at it. When did you realize that capital allocation would shape how you see the world?
So I think if I'm being honest, it took me a while. I think certainly the sort of during my childhood and during my education, I went down a different path. I was a sort of mathematician and a scientist. And so it was only really when I ventured into the professional world when I started to kind of join up the dots, if you like. And so, that's, 20 years ago now, so showing my age. But so, yeah, about 20 years ago, I think. But it took a while for it to kind of really, I guess, formulate within my own sort of development.
Now, would you say investment is maths?
Well, it's a great question. And I think we come on, there's another question a bit later on, so perhaps we're jumping the gun a bit. But I think naturally investors and anyone who works within markets, the starting point is quantitative. However, I think quantitative analysis on its own can be dangerous. So I think as you gain more experience, that qualitative element is something that really you develop and you are able to embed both. So I think to be a good investor, you need both, yes, absolutely, integrated together, because I think the problem with quantitative on its own is that it doesn't answer the why. And so you can make a lot of, in a spreadsheet, you can make a lot of stocks or projects or whatever you're valuing look good. You can look to sort of make high returns from these things, but you're not really understanding the numbers, or you're not questioning exactly why you think those numbers are what they are, unless you take into account the qualitative side of it.
So it's kind of like having the holistic approach.
Absolutely. And I think,
overall picture and overall scenario of what's going on in the world as well, and in
absolutely. And I think that's something that I've come to learn during my career. It's not something I necessarily understood from the outset.
It's kind of like, I think in the investment world, with experience, we kind of like develop also the skill of seeing the future, I would say, because you start seeing the patterns and you start seeing there is all this pattern going on, and once you realize that, it's like you're like, okay, this happened and now this is happening, it's similar, and this is how it's gonna end. And
you definitely have to kind of think about how you think the world will move in various industries and subsectors. And I think often though, people perhaps ask the wrong question. They sort of try to say, well, what will be different in 10 years' time? But actually, it might be easier to ask yourself, well, what do I know will be the same? And then sort of anchor opinions around that.
Yeah, exactly. Yeah, beautiful. What early experiences taught you the emotional reality of risk, not in theory, but in lived consequence?
So I think...
I'm asking this question from my personal experience as well.
Yeah. I think whenever you're working in a, financial world or sort of a world within markets, that kind of reality of risk quickly becomes evident. And so for myself, I started my career in markets on the sell side. And so, I was writing research and making stock recommendations. And so when you have those recommendations going wrong, or, thesis not playing out as you expected, that quickly shows you the reality of that risk. And as I said, I think on the sell side, it's amplified because it's not it's not just your own opinion and your own views. You're actually making these recommendations to clients.
Big responsibility.
It's exactly. So you feel responsible for those for those recommendations. And if you're losing money, or if your clients are losing money on the back of recommendations that you've made, then you bear the sort of accountability for that.
Yeah,
So
and then we need to work on it sometimes. I did make recommendations in the past as well, so I know how that feels. Was there a moment when investing stopped being about returns and became about responsibility for you? Did that shift happen, or was it?
So my feeling on this is that I don't think investing ever stops being about returns, which might be controversial, but I think that will always be your primary focus as an investor. However, I do think returns and responsibility go hand in hand, and I think being a responsible investor has obviously become a lot more, the weight that is placed on that has become a lot more important over time. I think the thing that I sort of have begin to kind of wonder about more recently is that there is an area of responsibility which I think is overlooked within investing, and I think that's a responsibility for like development, sort of talent development and people management. So I think in my experience, you have these very successful investors who can deliver good returns over the long run, and because of that, in a lot of these sort of big institutions, they are left unchallenged or left alone, if you like, because their focus is very much on that. But I think that is then has a negative effect on younger generations coming into the industry because people are not focusing enough on training up and developing talent.
Yeah, and the seniors are usually the ones who are making the decisions. And
yeah, exactly. So, well, it can change. It depends on, I guess, the structure and organisations of teams. But yes, ultimately, if you're working on an investment team, you have a portfolio manager, and ultimately the decision lies with them. And so, yeah, they are the ones who kind of, to some extent, carry a lot of that responsibility and accountability. But I think there is a duty of care for these more senior investors to try and help talent within the industry, and I think that's perhaps an area that can be overlooked.
Do you think it's getting too? Do you think it's just too slow right now?
Yeah, I think ultimately the incentives aren't aligned correctly. Okay. As in, so for a lot of investors, they their incentive is aligned with delivering returns. And delivering that, delivering returns for clients. Yeah. There is less emphasis placed on, basically sort of training up the next generation and passing on the baton. Now, so, in certain places that's done very well. They tend to be kind of very, longer term focused, perhaps boutique type investment houses where, they sort of spend a lot of time building up teams that work collaboratively. And so that sort of decision making is more shared. But I suspect there's quite a lot of places who are not exactly. And you need to kind of align incentives to make it, to make the sort of more senior analysts and investors within the industry want to spend their time doing that, because it is time consuming to train junior talent.
But then again, it's like it's kind of like a great investment as well.
Absolutely, yeah, exactly. It's sort of short-term pain for long-term gain.
Yes, exactly. And before you had all this experience and you learned the language of the markets, what values were already guiding you in your judgments?
So I think the three key ones that I would sort of highlight is first just curiosity. So I've always been very curious about, even as a young child, kind of asking about things and kind of keen to learn and sort of having a real sense of accomplishment from intellectual discovery. Sort of, I would say
that's the science appetite, I would say.
Absolutely. Yeah, exactly. And maths.
But why?
And,
But why?
Exactly. I think I've always had a certain sort of standard in terms of sort of striving for excellence, as in trying to do a job well, not just kind of doing it for the sake of doing it. And I think that continues to be a theme in all aspects of my life, whether I'm, just doing things at home or whether I'm, thinking about stocks or whatever it might be. And then I think thirdly is just like being honourable and sort of working with the integrity and sort of, which is kind of, making sure that, you develop good relationships with people that you're working with.
And that I find is one of the most important things, especially in the finance world, because although, there's something about the finance world that is very different than the other business leagues, I would say. It's kind of like it is very small in a way. It's like, because integrity is very important and doing honorable things is important. People talk. The word spreads faster. When things go wrong, the word spreads faster in the finance world. That's what I've come to realize over the years.
Yeah.
In other markets, maybe in other sectors, it might, but especially in finance, it's like it just spreads so fast, and that's why integrity, honorable actions, it's highly important.
Absolutely. And I think my experience, or my observations, if I should say, from, being on the kind of buy side, is that going through periods of underperformance creates a lot of pressure and stress on people and can bring out the worst in people. And so that's why it's so important to try and counter that and ensure that, behaviours are, as I say, you treat people with respect and treat people with trust and things like that. It's so easy for it to slip when you are feeling stressed and under pressure. And so why it's even more important, really, particularly in the investing world, to make sure that those factors and qualities are being emphasised.
And would you agree that needs a different level of mastery, self-mastery?
Yeah, absolutely. And it needs...
Not everyone can handle it.
No. Yeah, exactly. And well, I think, to be a good fund manager, you basically have to be right just over 50% of the time. So that's a big chunk of your performance or your output where you're wrong, right? So it's just under half, right? So you certainly need a certain type of mindset to be able to kind of cope with dealing with the
when
moments
things go wrong.
Yeah, when things go wrong. And it's, it's an industry where, you can put in your best efforts, you can work really, really hard and you can still be wrong and not be sort of succeeding. And so again, I think you need a certain type of mindset to kind of deal with that.
Yeah, and also maybe not taking it personal, although you are the one. That's kind of like challenging, because although you are the one who's taking responsibility, and sometimes making the decisions, then again, not to take it personal, because you did everything you can and it's your business and it has nothing to do with, that's kind of like, I find that challenging.
Absolutely, yeah. You're trying to have to remain unemotional, which is why often, the most successful ones tend to be the ones who are able to kind of basically follow a process. It's sort of, being very strict around your process and your investment philosophy and trying to kind of make sure that you're not allowing emotions to get the better of you.
Yeah. And after a lifetime in investing, what do you trust more today? Is it data, pattern recognition, intuition, or maybe all?
So I think, we sort of alluded to this a little bit earlier in terms of the quantitative part. So I think, data will always be hugely important within this field. And it's certainly the starting point for most people. However, as we kind of discussed, I think, you need to then overlay it with certainly the qualitative elements. And then, I'm a little bit torn sort of pattern recognition, because there's certainly kind of cycles that we go through. But, there's a danger sometimes in thinking that every kind of cycle is the same, because then they're not always. So it's about trying to sort of identify similarities, but then also understanding where the kind of key differences are as well. So, like today, I've obviously drawing parallels with, back with the sort of .com bubble and, but I think there are some very strong reasons why, the advent of AI is pretty different from that time period.
It's much faster. It's,
Yeah.
.com, it was just slow, and not this many companies, and also not this many verticals, I would say. So it's kind of like this. I see the .com, it kind of like one tree. This is kind of like a 500-year-old tree. It's just similar. There are similarities probably, but very different.
Yes, exactly. And you need to be aware of what they are before you sort of, immediately make rash comparisons, I'd say.
Yeah, what's happening in the world right now is keeping me amazed. What separates good investors from exceptional ones over the long term? What do you think?
So I think for me, this comes down to discipline. And, discipline around applying and adhering to a process, as we sort of talked about a little bit earlier, but also doing so with some flexibility. And as I said, without sort of allowing emotions to kind of get the better of you. So I think, human nature, you're kind of fighting some key sort of factors within humans, like, loss aversion, we try to be consistent. We always want to be right. But obviously, you need to kind of try and seek out disconfirming evidence for your thesis, not sort of burying your head in the sand, because you kind of want to maintain face or, maintain that sort of consistency of view. And so, I think it's important to always question your views and think about, the contrarian view as well.
Yeah, yeah. And how has your tolerance for uncertainty evolved over the years, and what did it cost you to learn that?
So I think my tolerance has definitely increased, I would say. And I think, again, it sort of comes with a little bit of experience and perhaps a little bit more, I guess, maturity around investing. But, you learn that, there's not a single predetermined outcome for a lot of things. Well, for most things, to be honest. And so you need to kind of think about the world as sort of distribution of possibilities. And therefore, when thinking about, investment ideas, you kind of need to take into account a kind of range of outcomes and then kind of, think about the probability of those outcomes. I think there's also a sort of realization that, formulating sort of forecasts and sort of building up data in a spreadsheet's one thing, but it's quite different from sort of execution in the real world. And execution at the corporate, within corporates. It's all well and good if it kind of works within your model, but you kind of have to think about that. I guess it's sort of thinking about the sort of qualitative factors as well, and whether whether factors are conducive for those outcomes happening.
Yeah. What's the most dangerous illusion investors carry, even at senior levels?
So I think for me, like overconfidence would be a key one. And, that comes obviously if you've had a very good track record for a long time, then, your confidence will, could be, exactly. I think also lack of, I guess, ownership of ideas or sort of accountability. So, I think, perhaps this is not as common, but, as the PMs need to sort of recognise that, ultimately theirs is, they have the ultimate decision, and therefore if there are stocks owned in funds, then they've sort of approved those funds, rather than trying to kind of create a gap between the investment ideas and the investment decision when it comes to kind of working perhaps with more junior analysts.
Yeah, and having that responsibility and just acknowledging that that's your decision at the end of the day.
Yeah, exactly, carrying the weight of it.
Yes.
Yeah, absolutely.
And that's probably why I said like it's another level of self-mastery, I think, because there are different layers. Yeah. And it's a great journey. Capital shapes culture, innovation, and power. How conscious should investors be of the second order consequences of their decisions?
I think the answer to this is, for me, is, they very much need to be aware of the kind of second order, or I guess the second derivative. And so I guess what I was kind of thinking about with this question is that, the many positive first order outcomes within the finance world often come with sort of a damaging second derivative. And so, for example, it's a bit too earlier, there's kind of perhaps some short-term gains from, let's say, if you're kind of
drones,
or if you're not investing in your business, or for kind of short-term gains on your earnings, but the impacts of that will be sustained over the long term. It's a bit like we were talking about earlier with the talent development. It's a short-term pain. It's a sort of tax on your time, but ultimately it's the right thing to do for the long term. So I think you have to kind of distinguish between that, the short term and the long term impact, and often things that are good over the long term will come at a cost in the short term. Yeah.
Over time, what kinds of businesses or founders have you felt personally compelled to back beyond the financial logic?
So I think for me, when you can clearly identify and articulate a business's competitive advantage, that is where for me you can really underpin the success over the long term, and therefore you have more conviction in the long term trajectory of earnings and cash flow, and that's when it's easier, or I think that the investment decisions are easier to come to, if you like. And so those would be the business that I would be sort of compelled to seek out.
And what kind of differentiations have you seen?
So
is it the team, what are the
so it can be different things, and often having the most successful, it depends on the industry that you're in as well. So it's about having like the right business model within an industry as well. So sometimes you want to be the lowest cost producer, sometimes you want to be the innovator and kind of reinvesting everything you've got. Sometimes it's about capital deployment. Often whatever the strategy is, the culture is a very important component of that, because it's one thing having the right strategy, but it's also the execution of it and delivery. Exactly. And
so you might have a great idea, you might be differentiated, a great strategy, but what's happening in the company? Are you executing it the right way? And
exactly. So they sort of come hand in hand. So I think, as I say, they're the sort of investment ideas that I find easiest to underpin, because I think you can really, you can map out the industry and you can understand, why this business will succeed within that industry, and therefore that kind of gives you this is the sort of qualitative aspect that we were alluding to earlier, and it's that sort of qualitative knowledge that then allows you to underpin the quantitative side of it.
Yeah, the holistic view.
Yeah.
Yeah. How do you define enough, both financially and professionally? I think this is a deep philosophical question as well.
It is. I mean, professionally, fulfillment is, I guess, sort of what I would look for. Am I, in a job and a role that, I'm enjoy, that I'm, continually learning and sort of, I guess, being productive and achieving results. But also that sort of relationship side of it is also very important. Am I, developing strong relationships with the people I work with? So that's sort of professionally. I think financially, I think security is probably the word I would use there, in terms of, am I able to, do I feel secure, when it comes to kind of, the life necessities.
Yeah. Have I built the system where I can be financially free? Like,
Exactly.
if I stopped working today, would my life go on with the same standards, not low? So it's like creating that system would be my idea of it.
Exactly. Well, and also just making sure it's not a cause of constant worry or concern.
Yeah.
So not, not living beyond your means into a position where, you are worrying about the future.
Yeah. Managing your...
Exactly.
Yeah,
exactly.
Learning to manage. And that needs a lot of discipline.
It does. Yeah, exactly. And I think, particularly in something like, investing, it's about, for me, it's about compounding. And so, for it to compound, you need to have, be invested for a long time. And therefore, you need to feel comfortable that the investments that you're making, are for the future. They're not, they won't, you don't need that access to that sort of capital or liquidity right now. So, I guess it's linked as well to my professional world.
Yeah, has being in the investment world also changed your view of the world and how you spend your money, and personally, probably because I think the value of money changes a lot when you see how money can make more money over time.
Yes.
I think once you change it, your spending habit, everything, your view of the world, everything changes. So
yeah, exactly. I think
our personal relationship with money.
Yes, exactly. I mean, you've got to. I'm very mindful of that, and think about that in terms of investing, any sort of spare, cash flow that I might have, and into kind of driving returns over the long term, and doing that not just for myself, for my kids as well, which is something that I wasn't necessarily even aware of the stock market when I was growing up. So it's about educating my kids, and because I think there is this common misconception, particularly in the UK, that the stock market's so risky, and there's a reluctance to invest money in it. But I think over prolonged periods of time, exactly, it really, and that's something that the US market is much more willing to accept, and there's so much retail money in the US stock market, and it's a real gap, I think, in the UK and probably Europe more broadly, and a reluctance to, it's kind of perceived as gambling to some extent. But I think, as I say, if you hold these investments over a long time period,
if you make long-term investments, then it's investment.
Exactly.
It's not gambling.
So I think that's a sort of gap in knowledge, and perhaps people being educated about it in the UK and probably in Europe.
And also, in the UK, also understanding that if you're an employee, you will never ever be able to earn that amount if you're not investing. I think understand, like, you're not gonna be able to get to where you wanna get to being an employee.
Yeah.
And this is kind of like you're working, but you're also putting aside some of your money so that the money can work for you, and that money can earn more than you do.
Absolutely.
I think understanding this is a big step in for people who's listening. Understanding that if you're an employee and if you're a business owner, if you're a founder, and if you're ambitious in this, it's a different scenario, of course. But if you're an employee, you won't be able to get where you want to get to if you don't start investing, and that's kind of like your money working for you.
Absolutely.
And that's the brilliance of the stock market.
Yeah, exactly. And it's about building the nest egg for the future. But absolutely. I think there's probably still a lot of educating that needs to be done on that.
Yeah. Yeah. What responsibility do long-term investors carry that short-term market participants often ignore?
So I think the biggest element here that I would emphasize is probably around valuation, which I guess what I'm sort of getting at here is that, in the short term, I think the market can act very irrationally.
Yeah, overvaluation.
Yeah, exactly.
Usually the
Exactly.
case.
Well, there's a pendulum and it'll sort of lurch one way or the other. I guess it's that
Yeah.
kind of greed
Yeah,
versus
yeah.
fear. But, where, negative things tend to be over exaggerated and so do positives as well. And so, but I think over the long term, you really need to kind of understand how to value businesses, because that's ultimately what will kind of drive returns. And so if you
Yeah.
understand the persistence of a business, you'll understand the valuation and therefore kind of, I think that's the element that perhaps more short-term market players don't necessarily spend as much time thinking about.
Yeah, we were speaking with some of my investor friends the other day. It's kind of like, we're investing in Snapchat or Unilever. It's like that's the, we saw what happened with Snapchat, and not to name companies, but you have to. So it's like long-term investments. I think the evaluation of the company is very different.
Absolutely. Yeah, and
sustainability is very important. Yeah,
absolutely, and it sort of comes back to that sort of qualitative element that we were talking about, and really understanding, where the industry's going. Yeah. What companies are likely to succeed within that, what's the right business model to have, and therefore how to kind of value
and
it.
finding the stronger rocks. It's kind of like the strongest.
Yeah.
Because it's still the survival of the strongest. The strongest will survive.
Absolutely.
So which companies are the strongest?
Yes.
That's kind of like the difference between the thinking, of a long-term investor. The difference between long-term and short. Because short-term, it's all about who is the fittest.
Yeah, exactly. I think I'm biased perhaps because I tend to have a sort of longer term view on investing, but I think long term investments tend to be a little bit more thoughtful about and therefore a little bit more measured about kind of decisions that they're making and analysis that they're doing, versus short term who are, just looking at the next sort of 6 months.
Rushing it.
Yes, exactly.
Yeah, more. I think long-term investments are wiser as well, so I'm biased on that. What belief about success, markets, or wealth have you outgrown completely over the years?
So I think the belief for me that success is directly correlated to your input or your level of effort is something that I've, I wouldn't say I totally dismiss it, but, it's having a lot of, putting a lot of effort in and working very hard is, as we discussed, is not a sort of predeterminant of success. And so you have to kind of make peace with that. And so it's something that, you kind of, it's not just about kind of ticking boxes and going through your to-do list. It's about, actually, am I coming up with kind of alpha generating ideas here and being, keeping yourself honest on that, on sort of analyzing your historic performance.
Yeah. And because of my background, I'm like, when you look at humans, I know that all of us are just searching for meaning, and, whether it's business, it's wealth, it's, health, whatever we're searching for or running towards, we're just, searching for meaning. So I think overall, finding that meaning, what's meaningful for you, and even in the financial markets, your role and, your strategy, I think that's kind of like, that's very human.
Yeah, exactly. It's about understanding what defines you and as an investor.
Yeah.
And therefore, understanding how to kind of sell that to clients or, it's certainly definitely is sort of applicable in the financing world.
How has working with capital for decades shaped your understanding of power, especially quiet, invisible power? Because that's what I think investors are. Most of the time, of course, it's not always invisible, but, it's like this quiet power that's backing up, or that's actually transforming, changing, managing the whole economy.
Yes, absolutely. I think for me, the where power is most underestimated or perhaps sort of not identified is where it comes from positions of sort of not making a decision, if you like. So kind of maintaining the status quo, or, because often that's where, what doesn't get decided or funded can often have the most important implications within an industry or within an economy. And often, it's very difficult to kind of seek out those decisions, or where they're sort of, not being made. But that's, it's things where they're being exercised without headlines, for example, and without kind of
Yeah.
PR or, without being
Yeah.
emphasized. That to me is where kind of power is at its quietest, if you like.
Yeah, agreed. And what does patience look like? Because in long-term investing, patience, I think it's a very important word, not as a virtue, of course, but as a discipline, like understanding why patience is so important. Patient investing is investing. Impatient investing is gambling, and why we should, have it as a discipline.
Yeah, so I think, so for me, in practical terms, I think being patient it's like a series of small, probably unglamorous, difficult choices that you're making constantly, and so often it will be exhibiting restraint. So resisting the urge to act.
And I love the word unglamorous because there's nothing fancy about patience.
Exactly that. So it is about, I guess it's obviously somewhat sort of sticking to your views and your analysis and not being swayed by the noise that's happening often in the market. And as I say, often it's about resisting the urge to take action or make changes and sort of remaining convicted behind the view that you had. That's on the assumption that you still think that the thesis is working. Yeah. But the downside of that is you can have what we call thesis creep, where you're sort of slightly moving the goalposts on the views that you set out originally when you made an investment. Yeah. But I think to avoid that, what I've found is that trying to be as specific as you can when you lay out your initial investment and be very specific about what you need to see from the company in terms of the financial results, and basically being disciplined around that. And as we sort of alluded to earlier, seeking out evidence when there is disconfirming evidence, i.e. looking for points which would disprove your thesis as well, not just looking for affirmative evidence.
Yeah. If investing is ultimately a mirror, what has it shown you about human nature? And I was also going to ask, I realize, long-term investors, as a long-term investor myself, my human nature also transformed into because when you learn patience and when you learn to just stay, and it of course gets reflected to your marriage, friendships, relationships. It's like that just transform your whole life and who you are. As investors, I think over the years we tap into the next level of our humanity as well. So what's your view on that?
So I think for me, the market is a great, it's sort of maybe not the best, but one of the best sort of illustrators of human nature, right? In terms of, if you think about the pendulum between fear and greed, and the mindset that comes with those different periods. And so, everyone's in periods of greed, everyone's kind of just thinking, oh, wow, how much money can I make? Where are the gains? But whereas in periods of fear, people are worried about the opposite, right? In terms of losing money. And so you need to try and wire yourself to think differently, though, i.e. in those periods of fear is often when you find good opportunities.
Yeah.
And vice versa, in periods of greed, often those are they're environments which are not conducive for good investment returns.
When you're greedy, like danger, watch out, stop.
Exactly.
When you're in fear, it's like there might be an opportunity, calm down.
Exactly. But it's about, as I said, we're talking about, human nature. You're ingrained to feel the same as the market is, and you sort of look for those positive attributes during those periods of greed, and it's very easy to sort of get carried away. And so it's about having the discipline to think differently at those important points within the market. It's herd mentality is a very easy sort of mistake to make, I think, in terms of getting carried away with the consensus, if you like. But often, I think once ideas become comfortable, often it's too late. The best ideas are when you're you're making them at a point where it is, you do feel uncomfortable about making them. But I think with investing, it's about making that decision when it's uncomfortable and then allowing yourself to build conviction.
Making the wisest decision when things are uncomfortable.
Exactly. And then, but perhaps starting small and then kind of building up your exposure as you build conviction behind the idea.
And I love what you also said, like I think kind of like balancing ourselves between fear and greed. And I remembered Warren Buffett's words, if you can't manage your emotions, you can't manage your money. It's like learning to manage our emotions and
Absolutely.
that kind of like gives us the opportunity to stay on top of things, which is very much needed, I think, as investors, decision makers, if it's your own money or other people's money. When you step away from markets and decisions, who are you without the role of an investor?
So I think fundamentally I'm very similar. I think I
long-term thinker.
Long-term thinker. I'm, innately curious about whatever it might be. I'm hardworking. I will, whatever job I'm doing, I want to sort of put 100% effort behind it. My husband calls me a perfectionist. And so, whether it's whatever job I'm doing, I like to adhere to a certain level of standard, whether that's cleaning my house or being an investor or doing the washing or whatever it might be. I put the same level of effort into everything. So I think fundamentally my sort of characteristics and qualities are very similar, both in professional
very
and
much aligned.
Yeah, exactly.
Yeah. And that's the formula for success. Like when you're that aligned, it's like, it's easy, you're doing your thing.
Yeah.
And that's very comfortable, I think. What truth has remained constant for you through all these cycles and crises and booms? What's going on in the investment world, in the markets?
I think the factor that I kind of kept coming back to on this was just you can't ever rest on your laurels in the investing world, and so you're only as good as your last quarter's performance or whatever the phrase is. And so and that's it's a positive and a negative in terms of I think you need to make sure that you don't let successes go to your head, but also don't get too down when you do make the wrong decisions. Because as we said earlier, you as an investor, you spend a lot of time making the wrong decisions. It's just about making it's about making the wrong decisions slightly less than your right ones. And so I guess it's a sort of there is a constant reinvention within when you're working in markets. And so remembering that, as I say, and never taking things for granted would be the kind of constant truth that I would
It's kind of
highlight.
like staying on top of things, just like the markets. As a long-term investor, you stay all the ups and downs, just,
Absolutely. I think that, whenever, I'm sure anyone who works with markets will attest to, is that, they're constantly changing. And so, and the market environments are evolving and therefore there's no one time period where it's exactly the same as historically. So you always feel like you're constantly on a learning curve and, you're trying to kind of second guess what's happening. And so you're constantly experiencing new things. And because, and therefore personal development and, intellectual development is infinite in a way. You never feel like you're
growing.
You're constantly learning new things, and that's one of the best. I think that's one of the greatest attributes of the stock market. It's never boring.
Brilliant. It's never boring.
Exactly.
It's never boring. I love it. Yeah. What are you still unlearning, even after a lifetime of experience in the markets?
I think for me, this again, trying not to get carried away with past performance or past successes. So it's about staying grounded and staying focused on what's coming in the next.
Being in the now. I mean, it's every day starting fresh and every day.
Absolutely. So I think when I started my career as an accountant, I was trained as an auditor. And I spent, during the 3 years of my time there, it was always backward looking. And I found that very frustrating because I felt that you didn't feel like you were having an impact on anything because you were always kind of you were signing off accounts that had been historically delivered rather than thinking about what will happen going forward. And so I think having that sort of lens to look forward is something that, I really value and enjoy doing. And so, I went from the complete opposite.
Yeah, thank you. I mean, it was a lovely conversation. I'm certain all of our listeners and anybody on YouTube is enjoying as much as I do. And finally, one last question. If you could leave one message for the next generation of investors about power, responsibility, restraint, what would that be?
Don't be blindsided by success. I think it's important to always act with integrity, as we've talked about. And I think listening to the other view is very important. Particularly, it's important in all walks of life, but particularly in investing, because often you can, listening to someone else's view is perhaps you might sort of uncover inadequacies in your own kind of thinking or investment hypothesis. So I think it's even more important in investing to kind of be aware of everyone's view and sort of test where you might be wrong.
Yeah, holistic world of view.
Exactly.
Yeah. Thank you very much.
Pleasure. Thank you for
Rosie,
having me.
I learned a lot, by the way, and a very insightful conversation. And thanks to everyone. Reminder, become a member on our YouTube channel and Spotify account. I'll see you in the next episode. Thank you for watching.